Good morning. We are live. What's up, guys? How we doing? Hope you're having a good morning here so far, and we are ready to rock the market so far here today. We're getting a lot of wicks. Volatility's all right. It's manageable. It's actually crept up a little bit in the last few minutes. Before it was a little bit low with a lot of wicks, but it looks like we're going to get some cleaning up here now. Heading into today, what am I thinking? Clearly, we're in a trading range, right? That has not really changed. However, one thing to consider here is if we look at the daily chart, do this, we're attempting a breakout right now. Now, we've had attempted breakouts before, all of them in the last, man, what's it been now? 6 weeks? All of them have failed, essentially. I would call this consolidation at best. But we're attempting another one here right now, so let's see if we get anything. The market is clearly hesitant. We're getting a lot of very heavily wicked 5-minute bars. So we'll see how this ends up looking. But for me, I'm looking at this price action thinking, yeah, let's scalp the range. I'm not taking big bets on breakouts. Let's scalp the range and see how we can do. And if something changes, again, if I get slapped across the face and say, hey, it's time to trade a trend, you've lost, 4 in a row, you clearly have something wrong, then we will do that. Corey, what's up? Good to see you. I appreciate you. Yeah, we are getting a couple of headlines here out of Powell. None in the last few minutes, so we'll see if we get any more, but the main headline here so far from Powell has been, quote, we could see inflation coming not as strong as expected. If that's the case, we would suggest cutting sooner. As if this is news. We know that already. So I wouldn't anticipate anything Powell says, honestly, to be big market moving news. He's just repeating the obvious. If we were all, the Fed chair, we'd be saying the exact same thing. He's just buying time. That's their job, right? Make themselves look good. So can't hate them for playing the game. What's up, guys? How we doing? Patel, Giovanni Joe, good to see you. Marshall, John, Brandon, TC, Chris K, good morning, guys. How we doing? C-Mac, Javaz, what's up? Clark. All right, so keep it out for some scalps here. Again, volatility, it's not tremendous, but we can make something happen. Essentially, we're looking at a 70-point range on the entire day here so far, but the ATR is sitting at just below 30. It's 28, so it could be a hell of a lot worse. I don't want to complain about that because it could be 16, on a 5-minute chart, and that gets a lot more difficult to actually trade. 30 or so, we can manage. Hey Lee, good to see ya. Steve, Bernard, what's up, guys? How we doing? Good to see you guys. Yeah, another Powell headline here. The Fed projections are for inflation to move up because of tariffs. It's sometimes comical how obvious and repetitive the Fed headlines are. So when it's like this, again, sometimes Powell will be talking and it'll be a lot of highlighted headlines that are moving the market. Again, like 2022 is a really good example of that. Right now, it's nothing. There's nothing here. So, if that changes, if he says something crazy out of left field, I'll let you know. But for now, again, I'm not too concerned with him saying something that's going to move the market like crazy. So, James, good morning. All right, we're clearly in a range here. You look up top, it gets even more obvious. Top left. That's brutal. That's brutal. I will put this out there. If it were me, do not trade the middle third of this range. You're gonna get chopped. The probability's too low, the reward to risk is not good enough, the equation sucks in the middle third of the range. On the outskirts, you know, you got to consider you're basically just betting against the breakout. Which in a market like this, if it breaks out, you know, fine. The hard part, by the way, it looks really easy. Just buy low, sell high. Sell high, buy back lower. The hard part about trading a range like this is figuring out how to manage your risk, especially when you have big wicks like this. Now, if we were to see this bar here, let's pop back here. If we were to see this bar close like up here, and then we got a small bear bar that closed near the low, makes my life incredibly easy. I sell the rollover of the small bear bar, and I risk that recent high. Easy enough. The problem is if you're selling into a bull bar, which again in a market like this can actually make sense. It's a little tough. At least for me, this has been tough over the years trying to figure out how to manage risk. I tend to do kind of a variation of the range. Like if the range is like 400 points, I'm not going to risk 20 points. But here the range in entirety is like 70 points. So, you know, the risk on the trade ends up being kind of arbitrary. Maybe I'd risk like 30 and try to just get an entry as close to the outskirts as possible. And then if it does break out, it has to go 30 points to cut it. Which, you know, to me starts to make sense. Again, I wouldn't be risking 4 points outside of the channel because you can see it hasn't been an exact science here. But I also wouldn't be giving it 100 points because then if you do catch the breakout, the risk reward is not good enough. So, just thinking out loud here. That's kind of my plan here for the day until this switches up. Prince, Peter, what's up, guys? Right back to the middle of the range. Again, hey, if you're just joining us, if it were me, don't trade the middle of the range. Best tip I can probably give you this morning, don't do it. You're gonna get chopped to hell. The probability is like 51-49. It's algo territory. There's money to be made, but I think our margin of error as humans is slightly too large to capitalize on that. We're much better off sticking to the outskirts. I think that's a common question is, well, why is there so much volume in the middle of the range if it sucks? Because algorithms are 70, 75, 80% of the volume, right? And they can make money in the middle. We can't, at least not easily, right? It's never a like, you can't or you will. It's always, hey, is it an extremely difficult thing? And do you need a huge sample size to make money in the middle of the range? The answer is yes. The sample size can be a little bit lower the more edge you have, and the edge as you get toward the middle of the range, at least if you execute, you know, properly, which again, we're talking 60-40 at best, 70-30 in futures as far as probability on any given trade. Toward the middle, that edge starts to shrink. It's still there, so it technically makes sense for algorithms to take as many trades as they can in the middle, but on the outskirts, it can start to grow. Now, again, on the breakout, you might say, well, then, if it's so obvious on the outskirts, these are the things we have to think about, right? This is the trader mind at work. If it's so obvious on the outskirts, why is everybody not, like, why does it even go there in the first place? Why would this even go higher if everyone's just going to sell the outskirts? Because everyone's not going to. Because you're going to have some people betting on the breakout, and if they get the breakout, low probability of occurring, extremely high reward to risk can work, right? That can actually produce an edge. They're going to get stopped out most of the time, but the one time they catch the breakout, if they can, they make way more than they risked. Okay, that's why the market has to be two-sided, otherwise it ceases to exist, or at least operate. But for me here, I'm looking at just staying as dumb as I possibly can. I know it seems like a really simple-minded thing here today, but that's how you have to trade ranges. Don't try to complicate it. You're not going to outsmart the range. Just trade the range, and when the breakout comes, You know, if you can maybe see it coming a little bit, if volatility picks up and you're getting, you know, 3 bear bars closing near their low, it's like, okay, we're probably at least going to take out some stops at the bottom of the range. Do we go any further than that? I don't know, but I don't want to be involved in that. Right? Those little calm tests, they make sense to take a bet. What's up, Tony? Kind of a crazy day so far here, man. Been a while since we've seen a 5-minute chart look like this. A lot of wicks. I'm going to keep an eye on this 2-minute a little bit more, I think, here, at least for now. When you compare the 2 top right to the 5 top left, the 2 is actually a little bit cleaner. Which is not usually the case, by the way. The 5 minutes, almost always the cleaner chart. Not so far this morning. Powell said, the reason we are not cutting rates is that forecasts in and out of the Fed expect a meaningful increase in inflation this year. Don't get caught up trading the headlines. They're just not relevant enough right now. Max, Nico, I passed 14 Apex 50K evals yesterday. Well, I hope you used the code BIG. Trading overly aggressive on purpose. That's right. Opportunity cost is a real thing. If you have an edge, you should not be spending 3 weeks in evals. I know a lot of people will say, oh, you should, but we're here to make money. Okay, if you have an edge, opportunity cost is a real thing. If you're going to spend 3 weeks in the evals, you could have spent that 3 weeks making money. And if your edge is big enough and you're taking payouts, you're costing yourself money by being overly cautious on all the evals. Don't take this and run with it. If you don't make money, if you don't have an edge, if you've never taken a payout, if all those things are true, you should take your time in the eval to learn the lessons for cheap. Okay, but once you have an edge, at least have reason to believe you do, meaning reason to believe that you'll make money the more you trade, don't be waiting. Don't be taking your time. I mean, take your time. Put on good setups, half decent setups at least. But I try to pass all my Apex evals in one afternoon tops. I just don't want to spend the mental capital trying to pass them because I can pass them relatively consistently. I mean, it's not that big of a deal. Obviously, it gets a little more difficult as you go to like the 150Ks, the 250Ks, the 300Ks, the 50Ks, man. When you've done, you know, I mean, really only like 5 or 10 of them, it's like nothing. But Max says, today the mind shifts to proper setups, risk management, and focusing on setups, not money. Good. Good. That can be the kicker for people if they, again, are focused on passing the evals and just getting through them quickly for that opportunity cost. The sake of that is that they don't shift back when they're funded. Make sure you shift back and go back to trading normal. All right, here we are, pushing a little bit toward the outskirts of the range here. You know, looking at the 2-minute, you could say, wow, that looks like, you know, that's an ascending support, man. And an ascending resistance. Yeah, maybe, you know, the Bears are always going to have an argument. The Bulls are always going to have an argument. But for me, I'm looking at the range and saying, you know, I don't really trust any breakout, at least that we're going to get a lot through. You know, you might get 10, 20, 30 points of push through, but we're going to get 80 points of push. On most of the attempts, the answer is probably not. And probably means a relatively high percentage probability, right, that we're not going to see that. Because it's a range market. And everyone is looking at the same chart. Now, I'll speak for myself, at least in ranges, guys. Like, you guys are used to seeing, I've taken plenty of continuation trades on stream, on video. I've also taken plenty of lots of different styles, but you guys have probably seen less range trading out of me, I would think, at this point, at least on live. And that's just because the market, for a while, it was very volatile. Tariff talk, kind of toward the beginning of the streams. Then what we were seeing was it was range bound, but we were seeing, it was almost like a bull trend, bear trend, bull trend, bear trend inside of a big intraday range. So it gave you room, kind of at the, like let's say like the low end of a bear trend turning back into a bull trend inside of a big range. You could kind of catch the first third of the bull trend as a continuation and then take profit as you get like 2/3, 3/4 of the way up into the range. You guys have seen me take a lot of those. This style of like range scalping, just kind of straight up buy low, sell high, it's kind of less of it. I would say it's less of an exact science, kind of more of an art form. The setups are going to look kind of more different every time. Obviously, every setup looks different every time, but continuation is a little more replicable, right? You can kind of see what I'm looking at every time. It's like, yeah, I see. But in range trading like this, it's a lot more just straight up buy low, sell high mentality. And the risk management is a little bit more arbitrary. But again, I base it on the range. Again, the range is 70-ish points today so far on the day, 75 points maybe. If it was 400 points, I'd be risking different. Maybe sizing my position sizing a little differently, sizing down the bigger the range is so I can give it more room. This range is starting to feel like it's collapsing a little bit as far as volatility. We rejected a little bit early and we're pulling on back, and now we're seeing a little bit of support. Like the 2-minute shows this relatively well. I'm still looking at this whole range here. But we also have to consider that this could end up looking like this. And then, you know what that turns into? A wedge. Flat top, setting support is what this could turn into. And in those scenarios, like a regular straight up wedge, the flat tops or flat bottoms, depending which way the wedge is looking, tend to be slightly weaker than the tilted level, like in this case, the ascending support. Doesn't mean it's always going to break, right? Just a slightly higher probability that you see it break. So in that scenario, I'm more interested in actually getting long for the test of the flat top. again, it's a little more of an art, a little more discretionary decision making in a range, which I think kind of sounds backwards, but I mean, I think that's the truth for most traders. All right, there's the pop through. New little high of day, at least after the bell. Now I'm looking to see if we can get a nice little push. Going right back into the range. Again, on these little pushes, I like to just always assume it's not going to go very far. It's a range market, right? Now, what is very far? Again, got to make a discretionary call to the best of your ability, whether you end up doing a third of the total range, half the total range. Up to you. Kind of struggling to get a push here. I'm interested in getting short if I can. And it's a range, context. And if it turns into a trend, then I'll just cut it and move on. Not in yet, though. I'm looking to see if we can get a little bit more. Little extra push to kind of match the bottom side of this range as far as the difference between wicks. Joe says, would you take the trade on the 5 if it pushes a bit more and closes at the top signal bar? Yeah, Joe, this is what I mean by context, man. This is like one of the biggest things in trading futures especially is I would be looking to get short. You'd think, that's a long setup. For me, not in a range market. Now, does it break out? Maybe 10%, 15% of the time. I'm not interested in super low probability, really high, really good reward to risk. I'm much more interested in taking a bit of a higher probability trade with a worse reward to risk in a range market. So you're really struggling up here toward 340. A lot of times when that happens, you'll end up seeing a small pop through. Kind of waiting on that, personally. Nothing through 40, at least not substantially yet. Patel, hey Nico, took a sell trade yesterday after stream below volume weighted average price, secured 75 points. Good work. Good work. I ended up making, yeah, yesterday afternoon I caught a few trades. I ended up going, each trade on average was maybe like $2,000 or $3,000. At the peak yesterday afternoon, I was up 6,000. Then I gave a little bit back off the top, trying a couple of smaller scalps, and I finished up like I think $4,500 yesterday. So it was an okay day. Kind of stuck between 335 and 340 right now. I mean, again, it's not uncommon when this kind of thing happens to see a little bit pop through just to satisfy the bulls, and then the bulls start taking profits and the bears really step in, kind of push it back toward the bottom of the range. Now, when I say bottom of the range, again, this can end up looking like ascending support, not necessarily way down here. I'm interested right now, not interested in getting long in the top of this range. If I were going to get long, it'd be more so down here. But up here, if anything, I'm looking to get short. And again, a lot of you guys are going to be like, well, that's a buy setup, though. You've bought that a lot of times not in range markets like this, right? If you can't read the context, I'm telling you that should be your immediate #1 priority, is to get as good as you can. It's never going to be perfect. Get as good as you can at reading the context of the market. No one else is talking about this. I don't get it. Everyone's just talking about setups. Setups are great. And then you get to what really matters, which are the setups, which is the easy part, and then applying them in the proper context. And again, proper context doesn't mean 100% win rate. It means small amount of edge scaled out over a large sample size of trades. And there you go, bears getting the pullback. I want to see a push into the 340s for me to get short. We saw a couple of ticks, but it was very short-lived. Well, here's the pullback that I wanted. Again, listen, I want to see a push at least into the 340s, and I want to get short up there and then risk 30-ish, 25 to 30 points on the scalp, and then look to get a pullback like this. A little bit premature for me to get an entry, but this is what I mean. I mean, you have to make sure you're learning from the right person. I'm sorry, but if you're looking around and you're being taught to just blindly take a setup no matter what the market context is, you're gonna lose. That's the reality. The market is more complicated than a setup, which is why, a lot of people are like, hey, like, explain to me that continuation setup you take. It's like, no, because it's not the right market for it. If I explained it to you, I'm setting you up to have negative expected value, which is why I'm not blindly taking every continuation setup right now. Good to hear it, Max. Now go get 14 payouts from those 14 50K fundeds, man. Baba, good morning. Question, did Apex have a one-day pass promotion and now it's over? Nope. Nope, look, right now, Apex for the next 13 hours is 80% off and you can pass in a single day and be funded tomorrow if you use code BIG. That's B-I-G. This ends in less than a day. This ends literally today. So I mean, okay, you guys see this big range? I mean, right, I'm looking at this, but I'm also considering, I mean, I really don't like to draw these aggressive wedges because these things tend to snap. But I'm also considering this as, you know, hey, maybe the market's looking at this as kind of the newer updated range. You always have to be taking this new information into account. This is not necessarily the entire range. It's the day's range, sure. But has the trading range been updated? What do I mean by that? Should I wait to get long into a way down here, or could I justify getting long maybe here? You know, and that would put me right ahead of the 20 EMA, which I'm not trading based on, but it doesn't hurt, right? Then I can place my stop maybe below here, somewhere that makes sense based on the new size of the range, which is relatively tight. ATR, by the way, the average range of a 5-minute bar, we're sitting at 24.5. Starting to shrink a little bit. Yeah, there's a little push. U.S. House Speaker Johnson, little headline here, we're on target to pass tax bill by 4th of July. That's the risk when volatility starts to fall. You get any little bump and it looks like a massive bar. Okay, here we are heading back toward the middle of the channel. This actually gives you a better look. We're in the middle of the channel right now, the big channel, right? This here, this look, remember we just talked about this. I said, hey, I hesitate to draw these super aggressive lines. They tend to snap, and there you go, you get a big snap. So now I'm looking at the big range again. Bull's trying to hold this stupid little 20 EMA. By the way, meaningless, except for the fact that people watch it. It's the only thing that matters, which is why I have it thrown up. All right, you make this argument. Gotta update things as we go here. That puts this range at about 40 points, 43 points. Which, you know, isn't the worst, could be worse. All right, let's see here. Test the top side of this range, and I get interested depending how the test looks. I mean, if we had a huge news bar just pushed through by 30 points, then of course we got to hold off. But a nice, reasonably controlled test at the top end of the range. There's no reason for me not to take that short. Risk 25, 30 points, look for a dump back into the range. Oh, that was a wick, huh? EU tariff talk. EU readies retaliatory tariffs to secure better trade deal with Trump. Give that a few seconds, let the algos do what they're gonna do. That's two back-to-back headlines from FT. Watch that news. There we go. I will position myself short. Here, let's clean this up. We know that this is here. We'll leave those. We can get a little bit more of a pullback here into the channel. So there's a bull bar closing outside of here, right? Closing above those previous little wick highs. So you know the bulls are going to look at that and say that's a sign of strength. For me, I'd rather fade the range. I know it's a range. If this does end up slowly turning into a trend, fine. But for now, for me, it makes more sense again. Trade the range, man. Stay as dumb as you can. Come on, Bears. Oh, you Bears. There's a news bar. Okay. Oh, Jesus. Hang on. Leave my take profit down there. I'm cool with this. Hang on. Let's see how this develops. Let this calm down. That put us very briefly damn near 30 points in the money. It happens sometimes. Hopefully this volatility will kind of die out. We'll return to normal very soon here. Terry, LOL got filled 1 in like 2 seconds. Yeah, I had my take profit a little low. By the way, you know, that's exactly why I leave my take profits. Sometimes, hey, it comes up 10 points short. I leave mine if I have to at like maybe 40. At least that's what I did here now. There's an element of, I suppose, luck involved, whether or not a news bar gives you a fill. But for me, it's like 40 points is pretty reasonable on a news bar. It's not unlikely that you get that if news does hit, and I like to leave my green side exposed to that. And then if, you know, if I'm taking something early, if that's the intention, then I happily will do so. But I want to leave myself exposed to a bigger move since on the stop side I'm exposed to that regardless. Place that guy there for now. Come on, Bears, do it to him. Some of you guys caught 30 points on that trade, man. I'm the schmuck left out to dry, at least for now. Come on, Bears. Couple of headlines there from Powell. Moving things a little. He's just repeating himself. It's you know, for years I've always thought it's very frustrating when Fed members just come out and repeat themselves and create weird, unexpected volatility. I get it. It's not their job to be concerned with us as intraday traders. But it's like, do we really have to have this conversation every other day? They're just saying the same thing. Well, I mean, believe it or not, on that news bar, we were very briefly up like 3,000 bucks. Which, really coming into this trade, I only really looking to get like 2. Kind of meant to be more of a scalp, right? Come on, Bears. This is the job, man. Sitting here watching a candle bounce back and forth 3 points. It's a very simple trade. All this is a bet on the range market. That's it. That's it. It's a bet against a big breakout happening in a range market. And if the breakout happens, it's like, okay, well, now we actually arguably have better price action. You stop yourself out and you get rewarded with better price action as a result. It's just, until then, it doesn't make sense to take those bets. At least, again, I'll say it again, not for me. I think not for most people. Bernard says, when someone asks you that he's thinking about starting trading, just show them today's market condition. Yeah, man, this isn't for everybody. But we enjoy it. Well, we've moved a total of about 10 points in the last 10 minutes. Range of that last bar was below 10, by the way. It was 9.25 in 5 minutes. The total range. That's kind of nuts. All right, Bulls trying to take this through the high. Let's see if they can. That's about 360 right now. They might get a little pop through, if anything. There's a tap. There's a little pop through, okay. Alright, Bulls, you got what you wanted. Now, Bears, let's fade it back. For me, when I'm looking at a range like this, I always, I always have to think, hey, if it's not a strong buy setup for me, then I have no reason to sit here and micromanage the trade. Would I get long right now? The answer for me is no. It'd be a rule break. You have plenty of bear bars mixed in. You're getting a lot of, anytime you see a push through into the high, you just get... So if I were going to get long at all right now, I'd have to get long toward the bottom of this little ascending channel. So I gotta let it sit. Eric, up 50 bucks today. Hey, you do that across 20 accounts. You're up 1,000. Not nothing. All right, if the bulls can get one more little intraday high, that might be enough to make us cut this. I'll take a push up into the 73s-ish. Yeah, right above 72. Patel, no. Nope, I have a free Discord. Telegram is... I don't know, it's fine. I don't have enough experience using Telegram to say anything about it, but... I think Telegram has a... kind of a bad reputation, at least in the States. Alright, here's the test. There's a small little wick into the high. It's just... You know, we're in such a range market that any little push the bulls get, unless it's on news, is just immediately met by selling pressure, profit taking, shorts entering. So, you know, the probabilities on this trade are definitely not in our favor at this point. But you have to also consider kind of the updated reward to risk as far as where we currently sit on the open P&L, right? So I have no reason, again, to just pull it. It'd be an emotional decision. I set my stop there for a reason, relatively arbitrary, but based on the range at the time of the entry. We'll see if the bulls can hit me out. That's a respectable close out of the bulls. ATR is at 23. Man, that last bar, look at the ranges, guys. That last bar had an 11-point range. Back here we had a 9, 16. Oh, we still got a shot here. Come on, Bears. Take out the low of that previous bar's wick. That'd be something a little new here. James, come on, man. You're down. You've lost 230 points in a row. Unless you're sized way too big, man. That's nothing. Those are little scalps. That's what I currently have at risk, 30 points. It's about that time, huh? Volatility today, man. This is just embarrassing. We moved like 10 points in 10 minutes. Range on the day is a little better. It's like 115 now. Yeah, it's not horrible. You know what's been really interesting I've noticed this like the last week. Hasn't been long, it's only been a week, maybe less. I don't know if you guys have also noticed this. I know a lot of you guys head out early each day. The volatility in the afternoon has been better than the morning. And I don't mean just like cleaner price action, you're not getting chopped out. A lot of times that's an excuse. I mean, like, it's just been moving more in the afternoon, which is kind of shocking. It's just kind of bizarre. That's almost never the case, unless you have, like, FOMC or something, obviously, in the afternoon. For me, at least, you know, lately, the morning's been kind of a grind, like, this last week. You know, if I've been able to catch a trade at all, we end up sitting in a 30-point trade for an hour. And then the afternoon, everything tends to clean up. I come back from lunch, everything looks pretty damn good, and I tend to do pretty well. Tend to do okay. Okay, cut it there. Finally, we can fucking move on. Okay, that's less than a $3,000 loser. That's a $2,800 loser. This is scalping size. I mean, again, it feels like that was like a long swing. We were probably in that trade for... Shit, I think I caught an entry here. Good lord, we were in that trade for close to an hour. That's interesting. Okay, so here, let's get rid of these. Now, I'm very interested to see if this move upside here turns into an actually tradable bull trend, because if it does, I don't think we're gonna see a like buy above, buy below anything market. I just don't really buy that. I mean, we are finally seeing a breakout here that's actually sustaining itself slightly here on the daily chart. We have not seen this. It's been a while since we've seen this. But this is one of those kind of melt up markets where, for me, if I were to get long here, I'd want to do so on one of these bars rather than using, like, it's definitely not a market right now, at least, to be, you know, buying above this with a stop order. I mean, that'd put you here, here. That's about it. You know, in hindsight, it's like, yeah, you're up 5 points, but it's not a great entry. Especially when it's not a trend market. We're in a range market that happens to be seeing a melt up trend as we speak. Is it gonna last is my question. At least these wicks here have cleaned up. That's good. That's good to see. Now, if only we could get these bars moving more than 10 to 13 points. All right, I will be back in 2 minutes. Don't go anywhere. All right. Okay, so I believe, correct me if I'm wrong, I don't have it pulled up right now. I believe the all-time high on the Nasdaq NQ is 22,450 on the dot. Can somebody check that for me, please? I believe I'm correct. Yeah, see, this is the problem with futures is totally depends which contract you're looking at. When you look at just straight up /NQ, all-time high, it might be during the New York session. I have to look at my settings. Is 22,450. And then if you look at different contracts, it can change, obviously. But I would go off of the straight up version. Yeah, Jonathan. That's a good point. Give me 1 second. I'm going to take a look at the Qs. Okay, so the Qs are $1.70 about away from their own all-time high right now. So we're coming into that. We're getting extremely close. The Qs are up, I think, 7.5 points today. And they're 1.7. They're $1.70 away from touching their all-time highs. So oftentimes when you get these slow little melt-ups into regions like that, like a potential kind of all-time high, again, depending where you look, that's one of the issues with futures. The market tends to kind of want to see it, at least, an attempt at it. The problem here is that this push, I gotta tell you, from the bulls, it looks very, very strong in hindsight, but where have we seen this before? This here. Where have we seen this? Just about every day for the last 2 weeks, you get a tight push, and then it turns into a trading range. So then everyone who gets long up in this region ends up sitting long in a trading range for 2 hours. It's been happening a lot. Now, if you can get a good enough entry, you can kind of put yourself in what would be the low end of the trading range if it even does turn into a trading range, and you're sitting long, so you're in a favorable position still. You got to get a good entry if you're going to do that. I'm thinking about here. ATR is down at 21. Yeah, see, this is something to think about here when you're looking at trying to get long in this range. Even if you get long at the low end of the range, the top end of the range is 15 points away. So you end up having to risk tight 10, 15, 20 points. So if you get a news bar, you know, an instant stop out is likely. And the upside isn't really great. If we could get a nice bear bar closing near the low and take out a couple of these previous bars wicks and close beneath there, all of a sudden we have a structured trade that can make some sense. There we go. We got a minute 43 left here on this 5-minute bar. Let's see what this bear bar can do. We are testing, by the way, the 20 EMA on the 2-minute right now. Not quite as meaningful as the 20 on the 5. Just less eyeballs, but worth paying attention to a little bit. All right, 50 seconds about left on this bar here. A relatively interesting close here. Give this about 20 more seconds, see how this develops. Ooh, the bulls want that to stay a channel. Let's give this one more bar and see. Bears stepping in again here. We've got 2 minutes, 22 seconds left here on this 5-minute bar. This is getting relatively interesting. There's two big questions right now. Well, I guess there's one big question. Does this turn into an ascending channel and the bulls take it higher and try to see a press into or through the all-time high, at least on the Qs? Or does this turn into a big dump off at least to the 50% retracement through the 20 EMA here on the 5 and maintain the overarching range market mentality that we've been talking about all day? The hard part here is getting short right ahead of the 20 EMA on the 5, because that's been respected quite a few times here today. All right, here's the noon Eastern bar right there. Not a lot of volatility instantly. Sometimes you get some algo activity on that rollover, not really today. All right, you see this? Shrinking bear bodies. Okay, bit of a wick, kind of an equal-sized wick on a smaller body. That's interesting there. Shows the bulls are at least trying to step in ahead of the 20 EMA here, trying to maintain that little ascending channel that they had previously. What's up, Mike? How we doing, brother? All right, now if the Bears can, we have 3 minutes left, by the way, in this 5-minute bar. If the Bears can take this and get us a nice clean close near the low of the bar, below the 20 EMA on the 5, which is my last kind of hesitation here, then I would short the rollover. Before that, the risk is just too high that the Bears bounce this back up into an ascending channel. So, got to give it about 2 more minutes to develop and then see if we can throw something on. Well, there you go. There's the bulls trying to take it back up into the channel. All right, guys. Well, if this is anything like we've seen the last week, the mornings, the last, again, like just week, it's relatively new. The mornings have been kind of a grind. The afternoons, for whatever reason, have been picking up in terms of volatility, and it's actually been slightly more favorable, at least in my experience. Again, not usually the case. Typically, volatility makes sense. The volatility is going to be better in the mornings. That's almost always the case. Lately, though, that's been flip-flopped, which is relatively rare. So hopefully this afternoon, we'll see a bit more volatility. We can toss on some scalps. Probably won't be doing too much swing trading today. Volatility is just a little bit low. I'd prefer to be, you know, the scalps aren't going to be tremendously fast by any means because volatility is low. You got to get the points, right? But leaving a trade on for 3 hours on a day like today, I don't know if is, at least not in my wheelhouse today. All right. Hey, listen, guys, if you want to apply to work with me one-on-one on my elite top-level program, we meet on video call. I watch over all of your statistics, make sure everything's good, help you scale, help you take it bigger. You can apply. I don't accept everybody, but you can apply at the link in the pinned comment on the chat. Other than that, hey, this ends in 12 hours. If you're looking to scale your accounts on Apex, literally, well, less than 12 hours, actually, like 11 hours. 80% off. You can pass in 1 day if you use code BIG at Apex. Again, this ends tonight, okay? None of us know what's going to be next, but 80% off is a pretty damn good bet. I'd happily buy accounts at 80% off when it is 80. All right, guys, I'm going to hit lunch. I'll come back. Hopefully, again, hopefully volatility here picks up this afternoon and we can make something happen. All right, guys, I'll see you in the morning. Have a good one.